Hi, hello everyone. Great to be here. So I'll start by introducing myself. I'm Aziza Inoubli. I am a regional lead at Briter Bridges. Briter is a research and market intelligence company. What we do is that we track investment, innovation happening in emerging markets with a focus on Africa. And we're here today to speak on Agtech in Africa as part of the ICTforAg event. And I'm very pleased to be joined by four great panelists that will share the discussion with me today. And we're going to speak on how can we unlock more innovation and investment into Agtech in Africa. So maybe I'll let my panelists present themselves, starting with maybe Margarete. Yeah, please, Margarete.
Thank you so much, Aziza. My name is Margarete Biallas. I am with the IFC, the International Finance Corporation, specifically the Financial Institutions Group, and I lead our Agri-Finance. Previously, I've spent 12 years building IFC's digital financial services practice / business, and it's a pleasure to be here. Thank you for having me.
Thank you, Margarete. Pius, please go ahead.
Yeah, thank you. My name is Pius Sigei from Amtech Technologies. I'm the CEO, and I'm in charge of East and Central Africa, doing system development. We do ERP implementation, and basically we make sure that the farmers get the right tools and also get the right financial muscles to be able to generate income and have some inputs. Thank you.
Great. Would be great to hear more about how Amtech has been doing that so far later in the panel. Thanks for being here, Pius. Justin, please go ahead.
Hello, hello everybody. Some of you, hello again. And Aziza, thanks for including me and us on this panel, and happy to share this with Pius, Margaret, and others. Abrahame. So my name's Justin. I'm a director at Beanstalk Agtech. We're an innovation advisory and venture building firm that's dedicated to a more sustainable, resilient and ethical food system. We work with startups, agribusinesses, investors, development agencies, and governments on kind of all things strategy in Agtech.
Thank you for being here, Justin. And finally, we are joined also with Abrhame Endrias from Lersha. So Abrhame, if you can briefly introduce yourself before we get into the panel.
Thank you, Aziza, for the opportunity. Good afternoon, everyone from Addis Ababa. My name is Abrhame Endrias. I'm a managing director at Lersha. Lersha is an Ethiopian-based Agtech company working with a smallholder farmer, promoting a one-stop digital solution, and then we use technology to ease the agriculture for everyone. And then recently we realized the challenge of farmers and Agtech companies in accessing financial resource to obtain the required agriculture service. So we are highly working currently on creating that interoperability between financial institution and an agricultural service, and a pleasure to be here as well.
Great. Thank you all for being part of this conversation today, and also thanks for the audience for joining. Please, if you have any questions throughout the session, feel free to add them on the chat. We try to answer them either throughout the discussion or at the end of the panel, but please feel free to share your questions, comments. Great. So let's maybe kick off. Maybe Justin here, just to kind of set the scene and speak about the state of Agtech, not only in Africa actually, but in emerging markets as a whole. How would you actually describe the landscape of Agtech innovation investment in emerging markets, and how does Africa actually differ from the other markets?
Great. Thanks, Aziza. Happy to share. And I'm going to share a few slides that I think put this into context. So as Aziza mentioned, I think what we can help bring to this conversation is a bit of some of the macro view and the differences across regions that we're seeing in the digital agriculture space. Last year, We collaborated with USAID, Gates Foundation, UK's FCDO, and DAI to publish a globally oriented State of the Digital Agriculture Sector report, looking at South Asia, Southeast Asia, Sub-Saharan Africa, Latin America, the Caribbean. We spoke with about 250 people, thought leaders and practitioners from across and related to the digital agriculture space. We had 5 different workshops, surveyed hundreds more. And I think our focus was not only laying out kind of the past, present, and future of the digital agriculture ecosystem, but really trying to outline some critical actions that beyond inertia and market forces that could make for a thriving digital agriculture ecosystem to come. So that's a bit of the framing, and I'm sure we'll get into that. But just I wanted to start with a couple of background statistics, kind of putting the space in context and where Sub-Saharan Africa fits in this space. So, first of all, this is a really dynamic space. There's been a lot of growth in terms of the supply side of solutions across the globe. We counted nearly 1,400 digital agriculture deployments as of 2022. There's been a bit of deceleration, but a big part of that is just because of earlier entities either shutting down or shifting operations or being acquired, and as many of nearly 50% of those 1,350 enterprises we counted as being started in the last 5 years. And I think really interesting is on the volume side, Sub-Saharan Africa is nearly half of these deployments across the globe. That's been pretty consistent for the last over a decade. I think another way to look at the differentiation on a regional lens is actually centralization. So in every region that we looked at, there's really been kind of one major hub or 1 or 2 major hubs where there's been a major concentration of innovation. In South Asia, that's India, nearly 90% of solutions. In Latin America and Caribbean, that's been Brazil, 60% of solutions that we're seeing. Actually, Sub-Saharan Africa is a lot more decentralized. Yes, Kenya and Nigeria, a higher share of solutions, but we're actually seeing way more growth across markets and the diversification of where there's their deployments and even deployments at scale. So I think that's important for the discussion. I know we're going to talk about business models and commercial viability, so I won't talk so much about what's on the left-hand side, but I think it's another important context when we're talking about funding is around profitability. These are self-reported numbers, and I venture to guess these look a little bit optimistic across the board, but I think it's interesting to see obviously the dichotomy across regions. We had about just under 50% of Agtechs that we surveyed actually responding they're still not breaking even, and which is, I think that's pretty positive actually at scale. But the difference between Latin America and the Caribbean, where 2/3 of the folks that we surveyed are reporting breaking even, in Sub-Saharan Africa, where it's less than 40%, I think is pretty significant. And then the last, which I think is more framing of the funding and the funding discussion in general, is actually juxtaposing a lot of that with where funding is actually happening and the level at which that's happening. So even though Sub-Saharan Africa is accounting for nearly 50% of solutions, we're looking at a much smaller share of commercial funding, in particular related to other spaces. So when we're looking at commercial investors, less than 650 million through 2022 in Sub-Saharan Africa. And you can see where in India, for example, 85% of that is commercial and sub-commercial investors. 75% of the funding that's coming through Africa is from multilaterals and bilaterals, and much less so on the commercial side. So just a bit of context, I think, to help frame this discussion on the funding landscape and the differences across regions.
Yeah, thank you so much, Justin. I think this really sets the scene. And I think one of the points that you highlighted that is like kind of very surprising in a way, which is like, despite the fact that Africa has the biggest share of Agtech innovations, like it counts for 50% of Agtech innovations in the global, like in emerging markets, we are seeing a big funding gap. So not as much funding is going into these Agtechs, despite their number actually. So here maybe, Margarete, I would like to hear from you. And from your perspective, so how would you explain actually this funding gap? The fact that African innovators are innovating actually when it comes to Agtech solutions. They kind of understood that there is a gap today, and in order for us to tackle the food insecurity, it is very important to innovate around agriculture and use tech for that. However, the investment is not matching actually. So how would you explain this funding gap today? What we're seeing in Africa specifically?
Thank you, Aziza. I think that there are different parts to the question, so I'll pull it apart just a little bit, because the tech is just only one part of, I guess, the problem and the solution. So we know that farming is immensely important across the African continent, right? Small, and specifically this means smallholder farming. So smallholder farming on average contributes about 30% to GDP. They employ somewhere between 60 and 80% of the population. But the entire sector, the entire agri sector, receives only about 3 to 5% of bank lending across the African markets. And that includes not just the smallholder farmers, but also the corporates who will be processors, you know, like your large breweries or dairies, etc. So that means there's a major access to capital shortfall for smallholder farmers specifically. And I think before I go to why our Agtech's not getting money is, maybe let's go step back one step and say, well, why is it that the agricultural sector generally and smallholder farmers specifically find it so hard to access capital, right? And I think part of the answer is that banks really do not understand the business of farming, never mind smallholder farming. It's very expensive to go out to where the farmers are, because they're typically not where the bank branches happen to be. But then I think the overall reason is that there are risk perceptions that financial service providers generally find that agriculture is a more risky business than maybe other industries, right? So not only are we talking about small businesses, smallholder farmers or small businesses, we are also talking about businesses that are largely informal, that are exposed to weather risks, etc. And while banks know how to deal with potentially an unwillingness to pay, and in farming terms that would be side selling, I guess, they deal with that by requesting collateral. There are so many risks the banks cannot assess, right? And we've spent the better part of a year analyzing how IFC can help change that, right? And help make it more balanced so that more funding goes into the agricultural sector as a whole. And how can we kind of change the equation, enable financial service providers to provide more access to finance for smallholders? And smallholders are basically your food security system for the continent. And it's not really money that is needed. I think mostly it's about risks. And that's where, in my view, the Agtechs come in, right? And so we go back to the first part of the question. We really believe that Agtechs can be a game changer for bringing financing, access to finance, but also access to markets, to inputs, to technology, and so on, to smallholder farmers. And they can really reduce the cost to serve and de-risk lending for banks. And they are kind of where the farmers are, right? But to be able, I think, to do more, so that means work with more farmers, provide more advice, more inputs, whatever, to farmers, banks, Agtechs need the ability to grow. And I think there are two ways they can do that. They can forever go and try and raise additional capital from venture funds, non-traditional financial partners, etc., or they can try and make their capital go further. And I think that's where at IFC we are coming from, that we think we may be able to create win-win situations where the banks can help Agtechs by taking the lending business off their balance sheets. And Agtechs can help banks by de-risking the lending for banks because they're close to the farmers, so they can support the origination and the monitoring of how the farming business is going, right? So how are the crops growing? And they provide the inputs, they provide the advice. So they have a really, really important role with regard to also success of the productivity of the yields. And many of the Agtechs also organize the offtake. So they somehow integrate with buyers if they themselves are not the buyers, which means they can basically ensure collection on the outstanding loan amount. So that's kind of where we are thinking, and we realize that Agtechs require funding, but they can use funding they raise to underwrite their loan portfolios to grow their own businesses. Beyond that, I think the Agtech industry to me is where the fintech industry was some 15, 20 years ago, right? They are startup businesses, they have risky business model, they work in a sector that everybody considers high risk. So money is not exactly freely flowing into Agtech investments. We do see that some Agtechs that are more mature find it easier to raise funding, albeit not with local funders, so not in the markets where they're active. Most of it comes from overseas. And I would expect as the market matures that we see more impact investors come in, followed by potential VC funds. And then the more traditional investors, I think, are the last ones to go.
Great, thanks so much, Margaret. Yeah, and I think you brought up many interesting points here, one of them being that actually, even if we look at the data, we can see that the products that are attracting the most funding in Africa when it comes to Agtech are those that have a B2C model, where the end user is smallholder farmers. So a lot of Agtech founders in Africa are innovating to serve smallholder farmers and facilitate access to capital for them. And this is exactly what Lersha and Amtech are proposing as well in our offering. So maybe here I'll let you, Abrhame, and then Pius tell us more about, from your experience, actually, how are you trying to solve that? How are you trying to solve the access to finance for smallholder farmers through Lersha and also through Amtech?
Thank you, Aziza. Thank you again. I completely align with Justin and Margarete, what they explained about the reality of Agtech in Africa. And especially Margarete mentioned the details of how Agtech companies behave and also the challenge of the smallholder farmers across Africa. So as Lersha, it's an Amharic word which stands for agriculture, and we truly dream to provide a one-stop solution to smallholder farmer. And one of the challenge keeping us away from that is access to finance. The access to finance, I see it both from as an Agtech company and then the challenge for a smallholder farmer as well. So as an Agtech company, your role is mainly to provide confidence for financial institutions to actually secure funding for yourself as well as for your clients. Justin was talking about an interesting study, which I also attended, that in Kenya, where the adoption of many of Agtech platform in sub-Saharan Africa is less than 5%. That provides you the feasibility of the business, whereas an Agtech company, providing that business case for financial institutions and get a formal funding is usually difficult. So as Margarete indicated, pitching to VCs and then getting fund from abroad is one of the feasible way for most of Agtech companies. We have never done that before. We do a cross subsidy. We have other portfolios, and then Lersha is using its own equity up until the business cases are mature enough to also attract investors. But when it comes to the smallholder farmer, I think the fragment land ownership of a farmer usually lower the business case of the agriculture itself, where dealing a loan book of thousands of farmers is a lot of work for financial institution. And also they see agriculture as a risky business. So providing a data-driven insight for financial institutions that As an Agtech, your role is actually to collect the data, to assess the creditworthiness of a farmer, and also, to play multiple role across land preparation to harvesting is very important to give that confidence to the financial institution as well. The other challenge is also, lack of data actually. Even if you want to do a data-driven insight for the farmer, but if you look at most of the rural area in Africa, accessibility to digital device is very low. So capturing a transaction, capturing the credit history of a farmer is one of the big challenge. We can echo the success of M-Pesa in Kenya. We're using the credit history and transaction of smallholder farmer who used M-Pesa, actually leveraged platform like DigiFarm to come up with a robust credit scoring. But again, I think access to finance require interoperability with financial service. The farmers actually require finance to get agriculture service. And the big question is, Agtech companies should facilitate the access of these financial services. And at the end of the day, the risk at a farm level bring the risk of default. And if you look at many of the financial services or products for a smallholder farmer are characterized by a heavy backup by development partner for a risk-sharing facility. I truly believe at the beginning that's very important to attract banks and then to attract other stakeholders to provide confidence that actually financing agriculture is risky, but that can be manageable. And then products like agricultural insurance and then leveraging on the data you collect from a farmer is very important to manage the risk as well. But there are a lot of developments. Implementation alliance like IFC work with Lersha in Ethiopia, for example, to play a lot of role by linking the off-taker with the bank, with Agtech, and with the smallholder farmer. In such approach, if everyone play their own role, the farmers actually, if they access agricultural services on time because they access financial resource, we can play a lot of role in improving their productivity. And then for us, I think that is one guarantee where farmers become committed for repayment if they see value in the financial service as well. And then I think the global experience of IFC usually help Agtech companies like Lersha to see a different holes and to see a different weak links. And then by strengthening that, actually, we can build success at a small scale. And then scaling that is I think, the next important thing. Thank you.
Aziza, you're on mute. You're on mute.
Thank you, Justin. So yeah, thanks, Abraham. I think this was very interesting to hear, and also seeing that I think you raised also an interesting point about the adoption, because we are saying that a lot of innovations today are targeting smallholder farmers, but at the same time, there is the challenge where the adoption rate from the smallholder farmers is kind of low today. So maybe Pius on that, like through Amtech, how are you trying to solve these problems? Like, what is your experience through Amtech on that?
Just allow me to just share two slides.
Please go ahead.
Thank you. I don't know whether you can see my screen about
Yes.
Amtech. So about Amtech is there's one big thing that we normally try to solve in terms of in agriculture, because what happened is that traditionally agriculture is has been seen as a slow and low margin sector, which makes it less attractive to the venture capitalists. And as Amtech, this has been what we have been looking at. Like in Kenya, less than 1% of commercial lending goes to agriculture. Why? The reason being, one, perception of agricultural loans being too risky due to drought, pest, low prices, and other risks farmers are exposed to. And that is, I think, I agree with Margarete and also with Ahmed. Number two is low last mile margin discourage banks from taking risks to learn the market and repayment rates. And the other thing which is also very, very important, that is what we are trying to solve, is lack of data on farmers' financial history to access creditworthiness. That's something which nobody wants to talk about, but it is very important, since most of the farming areas, they are just informal. There's no formality whereby they have a bank account or they don't have. And lastly, unavailability of collaterals by the smallholder farmers. You find most of them, they have land, but they have not been given title deeds by their forefathers. So that's another challenge, which it makes things, it makes that's the credit worthiness for the farmer to be low. So what we did as Amtech is, what we decided to do was to develop a scalable solution. Is a blockchain based, and it meets the financials and cooperative business and integration need to help them deliver value for their members. So what we do, we specialize on various value chains, and then we use the farm level data, which are backed on farmers' transaction, the history, and the produce, what they produce. And also we try to make sure that there is a faster turnaround time for loan disbursement and high loan recovery costs. So what did we do as Amtech to do that solution? So we developed some solutions which are very, very important. You can be able to see from this. One of the key solutions that we did was what is called a farm level data. And this farm level data, we capture what is called KYC. We capture domestic animals in the farm. We capture groups. We capture children education level. We capture land ownership. We capture all the other assets like now. If you have other farms, we capture focus questions, we capture farm practices, and then we capture communication. So we deliver this solution, the one which is called like ACS, and it's an online machine learning cloud-based platforms that enable farmers to get their loans, to get their credit score, and also can be able to enable them to get more money from banks or other institutions, and also allow farmers to apply for and receive loans within 24-hour basis through a mobile phone, and also allow farmers to deposit savings and withdraw money at any time. So these are some of the solutions which Amtech offers. You can be able to see what is called Easy Sacco, which is a Sacco core management banking software. Isima, which is for dairy management software, for coffee, for tea, for produce, and for Chum Switch. And so basically, that is what Amtech does, and that is where we have done some basic things to ensure that the farmers get some of the credit. And so moving on to the funding challenges, or the challenges which we as Agtech normally get. Now, I think number one was basically agriculture industry is seen as a slow-moving and low-margin sector, which is less attractive to traditional venture capitalists or with the banks. I can give you a very good example. Like when we developed the FLMD system, we requested for 2 million. We requested for 500,000 USD money from the funders, and nobody could give us because one of the key challenges was we had not been able to develop a lot of key structures in our farm to make sure that we could be able to get that money. So nobody will give us that money. So there are some things which we normally have challenges, like the funding sources. Okay, Agtech cannot be able to go to anybody and ask for money to be given. They are not being given just like that. They need to come and look at how far are you, who owns the company, what are the assets, what are the baseline of the balance sheet of the assets. So nobody will be able to give you that. The other thing also, which is a challenge to the Agtech, is the ecosystem. Okay. Some of the region, they don't have anything like networking. There is mentorship, incubation centers, innovation hubs. We don't have such things in some of the places, but I think I'm happy in Nairobi. We have quite a number of innovation centers, and at least some people like World Bank has come in to assist such cases. And also, I think World Bank is part of the IFC, whereby they look at the Agtechs like DAT in Kenya, which is very, very, very important. They also use like Massicops, Agri-Finance to make sure that they push that agenda for the Agtechs to come up. Because if there is nobody to support the Agtechs, it is very, very, very hard for them to just to grow. Okay, and there's this bit of it. You can go to see where we have done some of the things, like we have reached 329,000 farmers under FLMD, and we have digitized 217 circles. These are what is called, these are small enterprises, which they group themselves and form an institution. And we have done quite a lot of things in 24 counties in Kenya, and we are just moving to the East Africa. So I think that is what I have. Thank you, Aziz.
Thank you, Pius. Very interesting. Yeah, maybe to build on that, actually, because what you through what you presented now, we can see like the amount of capital that is needed also from an Agtech side to even be able to provide a solution. Actually, you talked about like the outreach to smallholder farmers, how heavy it could be also to collect accurate data on smallholder farmers. So I would like, my question would be here for both Margarete and Justin, actually. So how can we make sure, so for example, when founders are investing in Agtech startups, how can we make sure that the expectations are met? Because if an Agtech is reaching out to an investor to access capital, and the objective behind the capital is really to basically to do the data collection on smallholder farmers, would that be relevant? Like, would that convince an investor to invest in them? So here my question is more around the expectations from the investor side when investing in an Agtech startups. Like, what type of metrics do they specifically look at? Maybe if you'd like, Margarete and Justin.
Sure. So I mean, the primary, well, there are I think two metrics. Is the one primary one, I think, for every investor is risk, right? So what is the risk return look like, and what can be done to manage risk? And the other, which may be at least equally important, is really management. The management team, the commitment of the management team, the qualification of the management team. So I think one of my equity investor colleagues basically says, if I look at something, I look at five things. I look at management, I look at management, I look at management, I look at management. And then maybe I look at risk, right? So if a company is not well managed, I think there is no amount of risk reward return. Now with the Agtechs, because we look at them as potential partners to banks, we look at other pieces of what an Agtech should be able to deliver. And that's a little bit driven maybe by the understanding that Agtechs are probably not very good lenders and shouldn't be lenders. Because that's a whole different business, managing a loan book, managing FX risks, refinancing risks, etc. Many Agtechs do that, but I don't think they do that because that's what they feel is their core business. And Abrhame, correct me if I'm wrong, but the Agtechs that I've spoken to typically want to help farmers, right? Like Pius was saying, they want to collect data, they want to provide advice, they want to help farmers be better farmers, have higher returns. And financing is only one of them. So when we look at Agtechs and see would we invest in them, we also look at how successful could they be as a partner to a bank. So do they have profiling and mapping and data collection of the farmers and the farm, right? Do they do geolocation? Potentially have they got other data sources they use, like satellite data, weather data, at what cost? We look at what services do they provide to the farmer in the course of the planting to harvesting season. Like, do they provide advice? Do they regularly revisit the farmer? So that's basically, can they control if the farmer is actually farming, right? If the crop is actually growing, because especially if you have inputs that come staggered, you can go and say, well, you know, this crop hasn't germinated, so let's not deliver more fertilizer. So that minimizes exposure risk for a financial or for a lender, right? Then are they integrated? Can they collect the loan? I.e., do they have some integration with sales? So can they either avoid side selling? Do they have mechanisms that they become the preferred buyer, or that they're integrated with somebody who is the preferred buyer? And then the last bit is really, can they provide data on all of these transactions, and the farmers to financial institutions or to lenders so that lenders can enhance their credit scoring ability, right? And there are different kinds of data sets. There is sort of the farm data set like geolocation, historic yields, crops planted, and so on. That there are Agtechs that basically give you a farm score that says how likely is it that this farm is going to produce what they say they're producing. And then there's data that can be used for a credit score in the traditional sense. So yes, we do look at those things, but more because of the role we see the Agtech playing. For an actual equity investment in an Agtech, we would, look at primarily how well is it managed, how committed is the management, are they experienced, are they in country, right, and so on.
Yeah. Interesting. Thanks, Margaret. Just in here on that, actually, speaking on investment, and earlier when you started the session, you shared the slide where you presented actually also the distribution in terms of business models. And what we saw is that for Africa specifically, it's mainly heavy on the B2C model. So my question for you would be, according to your experience, actually, how can we make Agtechs in Africa who have like a B2C model more investable and more sustainable? Especially that you mentioned that for Africa, we are seeing, if we look at the profile of investors stepping in, it's mainly like non-commercial funders. So the idea is like, the question here is more around like, how can we make Agtechs in Africa more sustainable, but also more investable?
Yeah. It's a good question, Aziza. I'm not going to sidestep it, but I want to talk a little bit about like what also adding on to what Margaret shared. And I mean, I don't want to. I think actually Margaret did a fantastic job of just like detailing from the investor's perspective, and that's not me. But I wanted to talk a little bit about like what we see is important in the space and for Agtechs to think about. You know, and probably goes to a lot of the conversations that we have with Agtech founders in sub-Saharan Africa. I don't always think that the lack of investment is a reflection of a failure to secure investment. Like I think there's a lot of like, you know, I'm part of a small business, and you know, most of the small businesses that I work with are actually trying in some way to avoid investment and to bootstrap themselves. And if you can do that and build a successful business, like that's what is important. I think it's really important that Agtech founders focus on what their customers need, providing a product market fit, and finding the actual finance that fits that. I think a lot of the time maybe because that's you know the data that's out there, but we're, especially in the startup ecosystem, we're talking about and equating financing with the availability of venture capital and commercial investment, and I don't think that's always the goal, and that scale in a sense, and the metrics that work for that world aren't necessarily the ones that will fit founder and customers' needs in the Agtech space, especially in a world where we are, you know, like there's an inherent paradox around kind of scale and inclusivity in digital in some ways. Like we are constantly trying. You know, Abrhame mentioned some numbers that we pulled around, like the relative penetration in the Agtech space amongst agri SMEs and smallholder farmers being something around 5% in sub-Saharan Africa. Like that's, I think digital is really great for scaling to lots of early adopters. But if we want to push towards early adopters, that will take more time and more investment, and will put, you know, business models at odds with expectations of commercial investors. And so I think it's important to acknowledge that paradox, and probably to recognize that means there will need to be different capital models than what exists today in some ways, that to fit that. That being said, I mean, I think in terms of like how do farmers, whether it's B2C models or other models, become more investable? I mean, Pius pointed to really less than talking about the dynamics of the business. I think Pius just talked about the value of seeking out mentorship and building networks and actually building founder capability in that space. Like that's been something that's been being done through, accelerator and incubator programs for a very long time. But those don't exist at the scale in sub-Saharan Africa and then in Agtech in particular that they do elsewhere. And I think particularly given what we spoke to previously in our report around just the decentralization of Agtech in Africa, like it's in South Asia, we're talking about a huge locus of Agtech specific incubators in a few states, but we're talking about a much broader ecosystem when we're talking about sub-Saharan Africa that needs a lot more decentralized founder-focused support. So yeah,
Can you elaborate more on that, Justin, about the decentralization? Like, are you saying that we need more sector-specific support for Agtechs? Like, if you can elaborate more on that, on the decentralization aspect.
Yeah, I think we use more sector-specific, founder and Agtech focused support, but I think it's also about looking outside of just Kenya and Nigeria and South Africa, and where there's a lot of incredible businesses that are scaling there and growing there, but there's the supply and source of innovation in the Agtech space is much more decentralized in sub-Saharan Africa than it is in other regions, and I think it's important that we build infrastructure and support mechanisms with that in mind.
Yeah, interesting. And it gives me a good transition to speak on maybe the type of partnerships and the type of links and synergies that need to happen across the ecosystem, especially when we speak about sub-Saharan Africa, actually. So maybe Abrahame here, and also Pius, if you'd like to also, based on your experiences as Agtech startups, actually, what do you think were the most beneficial partnerships that you have built so far that helped in a way stimulate your activity or scale up your businesses so far? And maybe after that we can speak about the type of partners and stakeholders actually that we need to engage more to contribute in the ecosystem, especially on the government side. Justin and Margarete, my question for you later would be more around the role of government and the role of the public sector to de-risk the investment into the sector. So maybe before Abrahame, if you can speak more on the partnerships that you've built so far and how it helped.
Thank you, Aziz. I think as an Agtech company, providing a service, especially multiple services in a business model like Lersha, require multiple partnership with public institutes in a place like Ethiopia, where the role of public organization is very huge across different agricultural services, leveraging their presence, leveraging their partnership in terms of learning, accessing data, and using their ground presence actually gives you a quick landing and easy landing, especially when you expand to a new geography within Ethiopia or elsewhere as well. The other is also, training, awareness creation, training, and data collection are some of the expensive activity. As an Agtech company with a limited capacity, doing that usually the return on investment is very low. So we use a lot of partnership with implementation alliances like Agri-Finance, where they demonstrated a lot of capability in terms of using different means to create awareness. We also collaborate with the International Wiz and Mate Improvement Center and the Alliance Biodiversity from Sigei, where their great work on climate advisory and fertilizer recommendation actually help you to attract the attention of a farmer. By disseminating such a climate advisory for a farmer, farmers usually, after the experience of using a platform, farmer usually build trust. And with that use, you capture data on a farmer, and using that data for the points where we mentioned earlier to create the creditworthiness of a farmer. The other is also the lack of digital infrastructure in the rural area, including connectivity, literacy, and informed ownership of a farmer is one big challenge. And collaborating with mobile network operator is one solution where they really understand the role of agent network in a rural area, and leveraging actually their presence on the ground gives you a very good advantage of scale. Mobile network operator are one of a good advantage for Agtech companies like Lersha to scale also in a rural area. The other is, if you have agent network, everybody raise a question of sustainability for the agent network, and working with financial institution like a bank is a very good advantage. And we partner with multiple banks in Ethiopia to use our agent network, and whenever we register farmer, we open a mobile wallet account, and that gives a new client advantage for banks, and then for our agents and ourselves, it's an income stream. Also for farmer, it's an exposure to be onboarded for a new financial service. Overall, Agtech companies need to build a strong partnership stream, where partnership you can't build overnight. It requires a lot of alignment, where alignment takes time. And then understanding a win-win relationship between partners, and then strategic alignment is also very important. Since 2019, Lersha has grown in a magnificent rate. And then one of the success factor is a partnership. The partnership we built with public partners, private, and then international implementation alliance. The last point is, in terms of partnership, you also need a very long-term partners like IFC, where currently our effort is to try multiple value chains, and then to bring IFC clients as an off-taker, where if you build a successful business cases, the partnership always grow. And then partners are actually one of the ingredients for scale.
Thank you, Abrahame. Pius, if you'd like to add anything, especially on the role of the government and the public sector side in the type of maybe partnerships that like you need or you already have access to as Amtech to speed up your activity and reach scale.
Thank you. Thank you, Aziz. Just talking about the government, that is government programs and initiatives supporting Agtech innovation. I think it's very important because, like in some countries, government is everything. So if you stay or if you just work with the government, you can do quite a lot in terms of getting the customers and making sure you are very, very sustainable. So government programs and initiatives supporting Agtech is a very, very good partnership. If you, like in Kenya, we have 47 counties. If you partner with each county, you can be able to scale very, very fast, and you can be able to just to be sustainable. So that is something which is very, very important. The other thing which I want to add from Abrahame is collaboration with local cooperatives and farmer groups. If you do that, that's another way that's another very, very good partnership which it can work, and you can be able to have a formal setup at the rural point, whereby you have the cooperatives at the rural point, and you can be able to scale very fast. Those one also, you can use them as agents for your products and also for your services. So it becomes very, 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 very important. The other one is joint efforts with research institutions and also universities. Like for Amtech, we have like 3 universities we are working with, and it really works because universities have a lot of students, and students can be able to deliver your message at the last point of distribution. So that's something also which is very, very, very important. And lastly, alliance with like major agricultural and food companies, those whom we are working with. Like for us, whenever we are dealing with the dairy, we make sure that we partner with Kenya Creameries cooperatives. We partner with like Brookside, and we make sure that we align with them, and then they can be able to give us the business that they are that they are working with the farmers. So basically, I think those are some of the critical partners that we require now, especially specifically for the Agtech. Thank you.
Thanks, Pius. Great. We do not have a lot of time left, but I really would like to also hear from both Margarete and Justin on also like what are the public instruments that need to be deployed to make Agtech in Africa more investable and more sustainable. Any thoughts here, Margarete?
Yeah, maybe let me jump in because I think I'll tag on to what Pius and Abraham said and keep time for Margarete. So the first, I think it's great, awesome, Abraham, to also hear about the work you're doing with CIMMYT. I think it's where I had my first job, but it's so sometimes underseen and undervalued. Like we've had innovation ecosystems before, like we started talking about Agtech in the low middle income country space, and the National Agricultural Research Institutes, the CGIAR centers. We work with the Australian Centre for International Agricultural Research, and we're working with them on their first project in the digital agriculture space. Now, the first project now in Australia, and I know the CGIAR is doing more, but these are really large institutions that are, pretty siloed in some cases in their knowledge and the transfer between. So there's so much work that can be done to leverage these research and innovation ecosystems that have for a long time been focused on biophysical research, and actually leveraging for the power of digital and more broadly. Like they're very powerful networks. I think the second thing I just want to say is like Agtech, it's not a shortcut. And I think we think a lot about like how investment in agriculture technology might help us to overcome things like infrastructure gaps, but they actually work a lot better when that infrastructure being solved for. So like there's a lot of, it's already been mentioned about data infrastructure. Shouldn't underestimate just the value of still hard infrastructure. If you're talking about folks that are building digital ag tech for dairy ecosystems in India, the first thing they're calling for is like, we need more public warehousing infrastructure. Investment in roads and storage and everything that is actually truly hard infrastructure, that is what makes ag really still, contributes to riskiness today, is just as important, and is really a force multiplier in de-risking the ag tech space in general. So yeah.
Yeah, I mean, I think this is the role of government in agriculture more broadly is a huge discussion, right? So it probably merits almost its own conference, so as not to say at least its own panel. I think where I see the role of governments is pretty much alongside with Justin. So creating a conducive environment for ag techs, for farmers, for everybody else to exist, right? It's nice to talk about increasing access to markets, but if you have, or provide ag techs providing the best price for a mango in Mozambique, but if the mangoes happen to be in the north and the best price to be had is in the south, and there's no viable road, then well, it's not terribly useful information, no? So I think it's more building infrastructure, making access to digital services available. So the World Bank has this big Digital Economies for Africa program where they work with governments to assess digital readiness and see what services, what is available digitally. So I think those are areas that I would see governments focus on. I think investments should come from the private sector, and most government investments are not terribly targeted or overly successful, right? And that may at times include these huge grant programs that various donors provide to farmers, etc., which I think prevent people, farmers, ag techs, anyone in between, from actually being a viable business. If you're forever dependent on somebody's grants to come, you will never be a sustainable business, and we're not doing anything for the development of Africa if people are forever dependent on somebody's generosity. Yeah, so those are my 5 thoughts on the role of government.
Yeah, thank you so much, Margarete, and thanks actually everyone for this insights actually. But before we wrap up, I really wanted to also get back very quickly on a point where you mentioned, Justin, about the importance of decentralizing for Africa and the fact that maybe today, when we speak about Agtech in Africa, we keep the focus on specific markets. And at the same time, we also mentioned that Africa holds the biggest number in terms of Agtech innovation. So maybe also one of the reasons why we are not seeing as much investment going into Agtech so far today is maybe because of lack of visibility on the innovations happening in Africa. And I wanted also to use our conversation today and also to tell you more about the new program that we launched at Briter in partnership with Mercy Corps and Agri-Finance. So it's called AgBase. And so I will share my screen very quickly because I think it would be interesting for anyone who's active in the Agtech space today. So I wanted to tell you more about it. So as I said, so AgBase is an initiative. It's a 5-year program that is funded by the Bill and Melinda Gates Foundation and FCDO. It's implemented by Briter Bridges in collaboration with Mercy Corps, and we have partnerships with other players active in the ecosystem. And basically the idea is to provide a platform that gives visibility on the Agtech innovations in Africa, to facilitate access to this information to investors who are willing or looking at investing in African Agtech. And the 3 pillars of the program consists of intelligence, which is through the platform, the AgBase platform. It's also through research and producing insights and content on the sector. So Agtech in Africa, but not only in Africa. We're starting with Africa, but then we are going to cover other emerging markets. And the 3rd pillar is more about engagements, because we also believe that it is very important to think of convenings and also engagements and events and these learning spaces actually as part of the way in order for us to drive the sector. So yeah, just very quickly, I wanted to tell you more about AgBase, but I'm sure you'll hear more about it if you're active in the tech scene. And if you want to learn more, maybe I'll leave in the chat here the link for everyone to access to learn more about AgBase. Thank you so much again, panelists, for joining me today for this conversation. I hope everyone here with us enjoyed and learned something today. We hope to see you again very soon. And again, thank you so much for your time. Thank you. Bye.
Thank you so much, Aziz. A nice facilitation.
Thank you. Bye.
Thank you, Aziza. Thank you, Margarete. Yes.
Bye.
Thank you, everyone. Nice meeting you. Bye.
Thank you.
Bye,
Bye-bye.
everyone.